All right, good morning, trade pros. Welcome to our morning market update for Thursday, September the 20th of 2018. This is George Papazov from Trade Pro Academy. I want to welcome you to today's morning market update, and we got a lot to talk about. This morning, the S&P 500 futures are trading at fresh all-time highs, and so too is the index. So we got quite a bit overnight. And you might be wondering, well, how come the market's up when there's trade wars and tensions and an upcoming Fed meeting next Wednesday? And I'm going to answer all that. All right. First, let's get started by taking a little trip around the world. Whip out your passports. Let's fill up those back pages. In Asia, Japan is flat. Hong Kong's up 0.3%. India's down 0.1%. China's down 0.1%. India's closed. So we had some closures around the Asian markets. It was a little bit of a quieter session in the Asian and European markets. But it really started to take off in the European session towards the midday. All right, so in Europe, at around the midday point, London's up 0.2%, Paris rallied 0.8%, and Frankfurt up 0.6%. So good gains across the board in the European markets. Momentum picked up. In the United States, Dow's up 1.10, S&P 500 futures are up 1.10, and Nasdaq's up 1.10%, but up since that quote. So we're getting a bid. We're getting a strong bid here. All right. Markets are up. If you're wondering where you're kind of at this morning, you're saying the markets are up so much already. How could I possibly buy? Well, you should be buying, and you should be looking for dips to get into. It doesn't mean you buy it at the high. It means you wait a little bit after the open, see a sell-off, catch a nice level, qualify it properly, and get on board when the time is right. That's what we do. We go with the trend. If you find yourself fighting the trend, especially as a new trader, you're going to find yourself fighting your way out of money from your account. And that's just the God honest truth. You shouldn't be fading trends until you're at least 4 to 5 months deep into consistent profitability. And only then will you start to see the real fading opportunities. Not too early, not too late. So go with the trend, look for a dip. The probability for the market to rally out of any drop is much higher than you trying to catch a top. All right. Let's go to crude oil for a minute. Crude oil was up in the in the overnight session. However, now it no longer is, based on a Donald Trump tweet. All right, he comes out at 7:30 in the morning and tweets the following. He says, "We protect the countries of the Middle East. They would not be safe for very long without us. And yet they continue to push for higher and higher oil prices. We will remember the OPEC monopoly must get prices down now." That was his tweet at 7:30 in the morning. That's a very aggressive and firm tweet. He's saying a lot of stuff there. We can't unpack it all, but I will unpack this. He's pretty much pointing the finger directly at Saudi Arabia, saying, "Hey guys, come on, we talked about this. Get those prices down." And Saudi Arabia has great influence on OPEC and, in fact, on non-OPEC members. They're one of the largest producers of crude oil and suppliers of it globally. And so, in fact, they are the largest. And so that's where the pressure is being put on from Donald Trump. In reaction to that, oil market slipped. Brent, we're going to quote Brent because it was more active during the European hours, and so Brent goes from 0.5%, half a percent bid, slides into 1/10 negative territory just on that one tweet. So 0.6% drop on Donald Trump's tweet 7:30 this morning. All right, and I'm noticing something interesting about Donald Trump. He tends to tweet around 7 a.m. I don't know if you guys noticed that. Between 6:30 to 7:30, that's an opportunistic window. So if there's any Trump traders out there, literally you sit by your screen in that 1 hour and there could be some opportunity on multiple assets. The thing is, you need to be comfortable trading more assets than just one. If you're just a currency trader, then it's going to be tough. If you're just an oil trader, you're going to have some opportunity. If you're just an equities trader, what I'm saying is you got to be a trader of volatility. Stop looking for your favorite asset to move. Look for anything that is moving and get on board. And that's how you make consistent profit, because you're removing the dependency on one asset. And the game gets much sweeter and easier when you do that. Anywho, that's oil. So we're going to look at oil. There's going to be some volatility. Mr. Box, our oil desk lead, is going to have a great update for us this morning. I know it. And so we're looking forward to finding out more about oil in the room. All right. 10-year treasury yields flat, but above 3%, 3.07% on the 10-year yield. That's where a lot of bond kings and bond traders have said, look, anything above 3%, the market's going to eventually turn bearish. So that's something to know. Keep that on your radar. At 8:30 this morning, we had an initial jobless claims report. For the newer members listening, that just basically means how many people filed for unemployment. All right. Only 201,000 people filed for unemployment this past week versus 210,000 expected. 210,000 was already a very bullish number to expect. So the stage was set for a fail here. What did the initial jobless claims report do? It beat it. It jumped that bar. It cleared it with a lot of room. So it came out at 201,000 jobs, just shy of breaking the 100,000s. And that's the lowest level since December of 1969. All right. Holy smokes, that's a low number, a low print. The only issue with that is when that number printed in 1969, it was the lowest number ever. And then the market tailspun into a recession right after that. So it's sweet news, it's great news, but that specific 1969 date is not a good one to reference. Yeah, it happened. 1969, lowest number since then. Continuing claims at 1.64 million versus 1.7. Continuing claims are also down. 4-week average is 205 and 3/4 versus 208. That's also down. So this is a very bullish report. All right, that's what the markets liked it. It gave it more fuel and optimism to the upside. Philly Fed business outlook came out as well at 8:30. It also smashed expectations. 22.9 versus 18 expected. Big beat on the Philly Fed business outlook. Small to medium-sized business are the engine of the U.S. economy. And so new orders up 21.4 versus 9.9 prior. Huge beat there. All right, just blew the number out of the water the previous month. Prices paid are down, which is good. Input costs are lower for businesses, and employment was higher, 17.6 versus 14.3. Every facet of this index beat. All right, very bullish report. It's not a big report that a lot of traders will make decisions off of, but when a small report that's not as significant has a huge beat, it becomes significant. So that's what traders are watching this morning. Very upbeat tone so far walking into this market, and there's more good news. Before we get there, at 10 a.m. we have existing home sales, leading indicators as well. 10:30 we have the nat gas inventory, natural gas. At 4:30 we got the Fed balance sheet and the money supply numbers. So that's coming out after the closing bell. But at 10 a.m. top of the hour we got some potential. These are some big reports. Existing home sales could move, so could leading indicators. Keep your eye out for that. Okay, here's the big news about the trade war that some people tend to misunderstand here. So China this past evening took some really interesting steps. They made a response in the trade war. It was not like anything people had expected. I mean, they've said they would do it, but the fact they did do it becomes crystallized, right? So it's kind of buy the rumor, sell the news type event. Here's what China did. China's response to the trade war was to cut tariffs for their imports. Yes, you heard me right. Not increase them, cut them for their key partners. And when you look at who their key partners are, their number one exporter, or the number one person China imports from, is South Korea. Second is Japan. Third is the United States. And the premier of China said that he's going to cut the United States as well. So he said, all right, you guys raise your tariffs. We're going to cut your tariffs and import more, all right, at lower cost. We're going to lower the cost base of our products. He did say he's not going to devalue the currency. There's no plan for China to devalue the currency in response. That was seen as a non-aggressive reaction to Donald Trump's tariffs. Now the likelihood of Donald Trump and Chinese premier sitting down and negotiating becomes that much higher. So that's a market risk off. The sentiment right now is this trade war risk, it's not as great as it once was. All right, it's kind of priced in some new optimism. That's what's happened. Now here's an interesting thing. The premier also said must uphold multilateralism, in light of this move, the rules of free trade. If there are problems, negotiation is needed to solve them. That basically opens the door to says, look, enough's enough. Let's sit down and talk. This is starting to impact our market, and that's exactly what Donald Trump wanted to do. Now both sides realize it's time to talk. They're going to get together. And Donald Trump is moving into this meeting with a position of power, which is what he wanted. However, I'll tell you this. China is a 3,000-year-old plus civilization. They're one of the four what they call ancient civilizations. All right. And they've been through this before. The whole country's built on trade. So they know what they're doing. I think this is the right move. U.S. markets are loving this move. They're going to continue to rally on this. A lot of short traders are now going to scramble to cover their shorts at all-time highs and take a beating. There's going to be a bloodbath and a short squeeze, which has already happened overnight. There's more short squeezing to happen on the U.S. session. That's what I'm here to tell you. Money that was sold off from the institutional side will start to flood back in and coming in on the bid, so they're going to push prices up. More people wanting to buy the same asset leads to a higher price. All right. And any retail investors that have been holding off are going to jump in and say, all right, it's time to buy. There's no more trade war intentions. And at that precise moment, everyone's going to be long. We'll see how far up that'll take us. And the moment where everybody's long, you got to start thinking about the short side. So at some point soon, we're going to start hitting some of these rallies. Not yet, though. Get out of the way. This thing's got some headspace above, and it's going to clear up to it. All right? It's kind of like there's headroom. You're sitting down in an airplane. You know you could stand up. So the market's about to stand up. But from there, all they could do is sit down. They can walk around a little bit. But at some point, it's got to take a seat. All right? So that's what I got for you guys. China's response is muted. It's the least aggressive response possible. No devaluation, no selling treasuries. They're in fact going to do the opposite and cut tariffs on their main import partners. It's going to lower their input costs. They're going to receive more goods. All right. And they're going to, that way be more competitive globally. So that's the action they decided to take. That's one thing I admire about the Chinese economy. If you guys study the Chinese civilization as a whole, there's a lot of awesome stuff in there. Very like ancient wisdom. And I admire from an economic standpoint, what they've built is incredible. All right. I like the China story. Honestly, I personally do. If you don't, feel free to disagree, and that's okay. But what I like about it is the way it's grown, the business practices they put into place. And this is a smart move, because when somebody gets aggressive, you could take it personal and make it into a fight. Or you could just say, look, what's good here? What's the right move for us to make money? It's not about the perception of winning. It's how your economy actually grows that matters. And there's somebody that talks about that yesterday. Yesterday, I was laying on our conference table. Mark wasn't here. Victoria was. So a little bit tired after trading, made some money, decided to relax. I was laying on the conference table in the room, watching Jeff Bezos' Bloomberg interview. I don't know who watched it. It just came out yesterday. Phenomenal piece, 48 minutes. You could spend 48 minutes of your life watching that. It's very good. And he said the following. He's like, when you're a big company, all right, when you're a big enterprise, when you're a big government, you need to be scrutinized. All right, it's a safety mechanism for society. And he always says, I tell my executives, whenever we're being scrutinized, when somebody's poking around, don't take that as an offensive. It's not personal. It's just business. They're not going against you. They're just making sure there's checks and balances in place for safety. All right. And he said it's a good thing for society. And that's why I think China might have heard that interview. But that's kind of the reaction they've taken. That's where I'll leave you guys. Watch the Bezos interview. You're not going to learn about trading, but you are going to learn the fascinating way this guy thinks. I really enjoyed it. That's right. It's on Bloomberg. It's with David Rubenstein, and you can watch it if you just Google it. It's out. All right, guys. See you later. Have a great day. Look to buy this market on some form of a sell-off. What that looks like, I don't know. But we're going to look at it in the trade room together and find out. You have a great day. I'll see you tomorrow morning at 9 a.m. Trade careful, manage your risk, and trade like a trade pro, says Marky. Later, guys. See you tomorrow. Bye. All right, trade pros in the room. Let's map out some levels. There is a good level that I think we'll get to for a long opportunity, and we just have to be patient for it. Yesterday, I got the profit I was looking for in just one trade. Today, I'm looking to do something similar, 1 to 2 trades in a strong trending market. The one thing that you need to be cognizant about is pressing yourself and maybe going for too much rather than too little. All right, so I'm going to explain to you how we're going to trade and tackle this.